Warming up. I'm ready. Give it a old clapper dapper.
Clap, clap. Okay. And away we go. Welcome. You're listening to the Best of Investing on Talk 910. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And for those of you listening for the first time, here's our format. A few guys, in this case it's just Mark and me today, sitting around a bar having drinks without the drinks, talking.
Sure wish we had a couple of drinks.
I know, I could use one right now. Talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and me, Edward Brown. So our phone number is 8. I'm used to having another person to talk about here.
Where are those guys anyway?
Goofing
off today.
Goofing off today. We'll have them back next week. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. Now, the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. And the vacations are free. Their only request is a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. Check them out. You can reach them at 916-777-5511. And today's trivia theme is the movie Back to the Future, specifically Doc.
Doc.
Doc, remember him?
The crazy white-haired guy.
That's right, Christopher Lloyd.
Yes.
Oh, I don't know what's going on. Okay, our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show, and we're also on television, Comcast Channel 26 and AT&T Channel 99 on Saturdays at noon and Sundays at 6 p.m. Now, we had gotten a couple of emails, and this one actually is one a little bit more up my alley.
You got an email.
Yes, I
All right,
did.
congratulations.
Okay. Yeah, thank you very much. Thank you very much, as Elvis would say. So here's the question. Should I go with a larger company for life insurance because they're safer than an unknown company? So listeners basically trying
I always
to
wondered that myself.
Okay, listeners trying to figure out should they're going for life insurance, and should they stick with the bigger company or should they go with a smaller company that might have a better premium? So here's where we're going to educate the public. All right. Generally speaking, this is just a general rule of thumb. The larger the insurance company, the worse they are. Okay?
In what terms?
From the standpoint of the premium.
Premium?
Yeah.
Really?
Now, in this case, what we're talking
So it's
about...
not the Walmart effect.
No, that's correct. That's correct. It is not the Walmart effect. Every once in a while, depending upon your age and your health history and how much insurance you want, sometimes the bigger companies are better. But the nice thing about this, we're not talking about homeowners insurance where you have to argue about whether something's covered. In life insurance, either you're dead or you're not dead. It's pretty simple. Yeah. So the interesting thing I wanted to share with the public is that there's never been a case in the history of life insurance, and we're not talking about some fraudulent company where a guy goes door to door, collecting premiums for some ABC company. Any decent company that's domiciled in the United States has always paid on a death benefit. Now, a shareholder...
So don't buy that Russian company, heavily discounted.
Yeah, or the Nigerian email one. Exactly. But any, decent company that's been out there for, 10, 20, 30, 50 years...
But you're saying any American-based insurance company has...
Always paid
so
a death benefit.
Okay,
there's never been a default. That's right.
Right.
Now, an annuity holder might have gotten hurt, or a shareholder got hurt, but not a life insurance policy holder. And generally what happens is that another company comes in. It's rare for an insurance company to have problems, but when they do, another company comes in and buys out the policies. If you remember, many years ago, Executive Life was one of those companies that was getting very, very large, and they were having huge problems. Not a single life insurance holder got screwed.
And they were having problems not because of their insurance portfolio, right? Usually these companies were out investing in real estate and other activities, trying to diversify their cash holdings that they got from all those premium payers, trying to earn a return on that so they can be a profitable company net of the death benefits.
Yes, it's all done actuarially.
Yeah,
and all that.
yeah. So the moral of the story is that you can go with a low price leader.
That's right. That is exactly right. Okay, so I want to point out a couple of things here. don't go for those let's talk strictly term policies for right now. Okay, really simple. You pay your premium, and you can get it either fixed for 5, 10, 15, 20, 25, 30, even 35 years, a fixed premium if you want. Or you can get a kind that adjusts every year. Okay, do not go for those policies that you hear on TV or the one you get in the mail that say, gee, all you have to do is answer 2 or 3 questions, and we're not even going to have
guaranteed coverage.
Guaranteed coverage. Now, why is that? If you look at the premiums, they are astronomical
per
$1,000. That's correct.
Oh, yeah.
Now, think about it. If you're an insurance company and you're willing to insure anybody, guess what? You're going to get
this form.
Yeah, you're going to get all the unhealthy people to apply, and it's all figured actuarially. So let's put it this way: the only people who should go for those kind of policies are the ones who are extremely unhealthy, who cannot get
Drinking,
insurance.
smoking, and eating lots of McDonald's.
And, yeah, that's right. Yeah, in fact, yeah. I used
No
to,
offense, McDonald's.
well, yeah,
Any
yeah.
fast food.
Well, I used to tease people when they say, theoretically, your cholesterol level is supposed to be about what you weigh. I said, well, let's see, I weigh. My cholesterol level's 350, so I guess I gotta gain some more weight, right?
Going in and out.
Yeah, exactly. Okay, so don't go for those kind of policies. You want the kind of company that is going to make you jump through the hoops. Blood test, go
Right.
look at your medical records and all
Every time you change policies, they always make you do the whole
that.
testing thing.
That's
You gotta
correct.
draw blood. I know it's a pain, but
Okay.
you gotta do it. It's worth it.
All right. Here's another few little tidbits here. Use an independent agent, of which, of course, there's a little
Little plug for
little
Edward
plug
Brown.
for me. Yes, I'm completely independent. You don't want to go with a company that has what they call captive agents. In fact, it's interesting. I actually had a life insurance agent from a captive agency actually buy life insurance from me because I could get it cheaper than what he could do.
Anybody.
That's right. That's exactly what he said. He said, "Don't tell it because I'll probably get fired."
Yeah.
Okay, so you want to always use someone who's independent, who's licensed, obviously, with different companies. See, I'm licensed with 100 or 200 different companies. There's literally thousands of insurance companies.
Right.
And what I do is I hooked up with a major agency that just basically says, here, we represent like 200 or 300 of the top decent companies out there. So what we do is we run the numbers through the computer, and out pops the cheapest. I have a commercial in the air here too. They kind of use that information. Okay, this is something a lot of people don't know. Some companies, and I won't name them, but some companies have insurance policies that are effectively the same, but they pay the agent a higher commission. And gee, guess what? If the agent gets a higher commission, guess what?
The premium's going to be a little
Thank
bit
you.
higher. Yes.
Exactly. So what I do personally is I just get whatever the dirt cheapest, lowest premium. By companies that are at least around. It's not a crazy company. So one of the things that I want people to do for a free, no obligation quote, they can call our 888-912-1190 number, and I'll run the numbers through the computer, and I'm not going to hassle them, no salesman will call type of thing. I'll just give them the quote, and if it's something they want to go for, then we'll go for it. If it doesn't sound good, no big deal, but it's always good to get a second opinion, and if you already have life insurance, let's run the numbers and see if we can get you better. If not, no big deal. Tell you what, we're going to cut to our first commercial break here, and again, the theme is the movie Back to the Future, specifically Doc. Here's the question. What kind of car does Doc build the time machine out of? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In the movie Back to the Future, what kind of car does Doc build the time machine out of? One more time, 888-912-1190. Make sure to include your name and your email address. Please speak slowly. Spell out your email one letter at a time. And don't touch that dial, because when the Best of Investing comes right back, we have a very interesting email for Mr. Hans.
Yes.
Hello.
What are you listening to over there? Led Zeppelin? You got your-
Yeah. Pretty cool. Oh, yeah. My head's not right.
Da-da-da. I
I
like
actually
that song.
listened to Elvis live.
Elvis live.
Live, yeah, he's talking to me.
I knew he was still around. I just knew it.
Yeah.
There's a book written by who's that author that writes all these scary sci-fi horror novels?
Ray Bradbury.
Yeah, no, it's not.
Oh.
I can't remember his name now, but he writes a series of novels. And his character is a guy that can talk to the ghosts of famous people like Elvis. And
Oh,
yeah.
that's a little talk too.
In fact, one of the books, Elvis comes and he chats with Elvis. So it's so weird. It's well done. It's actually not schmaltzy. but-
Pretty interesting. Yeah.
Okay.
Are you ready, Mr. Kramer?
Absolutely positive.
Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money, California's fastest growing private lender. And when we cut to the first commercial break, we asked this trivia question. Again, the theme is the movie Back to the Future, and specifically Doc. What kind of car does Doc build the time machine out of?
That would be the DeLorean.
DeLorean, that is correct.
Infamous DeLorean.
I always wanted a DeLorean.
Yeah.
I thought that was kind of cool. Figured I'd only buy it if it could promise time travel. That didn't happen. Okay. So, Mark, oh, by the way, audience, when you answer these trivia questions, if you think it's too many people are going to call, so I'll never answer, I'll never be in there.
Right.
You'd be surprised. And what I'll do is I'll get all the emails or get all the phone calls, and then I will email back to people if they were one of the first three callers, or if they're calling number 4, 5, 6, 7, 8, 9, whatever.
Okay.
So at least people would know what caller number they were. Okay. So Mark, we got an email here. It says, how are you able to achieve such conservative loans for your portfolio? I've heard you mention on a previous show that your fund's average loan to value is only 55%.
So that's a listener that has heard me talk about my company, Pacific Private Money, where we have a mortgage pool fund product called the Pacific Private Money Fund that pays yields of, our target rate's about 8.5% on an annualized basis, secured by real estate loans, largely California and Bay Area real estate loans. And in fact, third quarter, we just sent that out a couple weeks ago. It was at an 8.9% annualized return to the shareholders. And so the question is how are we able to achieve the conservative loan to value that we have in the fund? Because I did talk about the fact that the weighted average loan to value, if you take all of the loans, the total loan amount, and divide that by the total market value of the real estate secured therein, the number is 55%. So the weighted average loan to value is 55%.
That's
in the
extremely
fund.
low.
It is. Now, it won't necessarily stay at 55. It may creep up, in fact, or it may go down. It really depends on incoming deal flow. And we are seeing a lot of quality deal flow at Pacific Private Money. And the reason we do is because we've been around for 5 years. We've done over 600 loans. I market the company like crazy. We do email blasts to real estate professionals. I speak at a lot of industry events. I was just in fact, I spoke 3 times at the American Association of Private Lenders Conference just 2 weeks ago in Las Vegas. And before that, I attended the California Mortgage Association event. So, I try to get out and market the company. I'm really an evangelist for Pacific Private Money. I've got a team at home, not at home, at our home office, who originate the loans, who answer the phone. I've got a staff of 8 people in there, and so they're all hard at work on originating the loans. I'm out crafting the deal flow for the company, and we get really good loan applications.
Well, since we're on television also, can we call you a televangelist?
Televangelist.
You're not asking for any money from me, though.
No.
Okay.
Well, I'm not asking, I'm not asking for any money from anyone, because quite frankly, look, money's a commodity, and there's a lot of it in the Bay Area, and a lot of people with money are looking for ways to boost the yield they earn on it, particularly in this low interest rate environment. So we're, when we talk about, hey, our mortgage pool fund, which the assets of the fund are one of 2 things. It's either cash or it's a notes secured by real estate at generally no more than 70% loan to value on a loan by loan basis.
Well,
but on,
at 55% loan to value,
I mean, a lot of the loans are lower than that. We have some 25, 30, 40%
okay.
LTV
I'm
loans.
thinking, okay, so if I'm the audience listening, I'm thinking, okay, if the loan portfolio averages 55%, I've got to be earning only about 4% in that fund. It's got to be really low.
Well, you're not, because of the nature of the loans that we're making. They're generally short term. They're generally, hey, I need the money by next Friday, and I'm willing to pay 9, 10, maybe even 11% for that money because they don't intend to hold it that long. And it's usually a business purpose. In fact, the nature of our industry, the private money lending industry, also known as the hard money lending industry, we use them interchangeably. The nature of the industry is business or investment purpose loans. These aren't consumer home loans. These aren't seconds to homeowners in distress. These aren't loans to people with one foot in bankruptcy. These are loans to investors, to real estate professionals, or someone who owns property with equity and they want to pull some money out because they have a business opportunity to take advantage of.
Okay, and what our listening audience on Best of Investing may not know, but we have a sister show
Yes,
that
we
we
do.
called Mortgage Investing 101 on KNEW 960 AM at 10 a.m.
Right, you missed
on
it this
Saturdays.
morning.
Yeah.
Right. So next Saturday,
Or go
set
to the
your alarm-
podcast.
Or go to the podcast. So
Yeah.
next Saturday at 10 a.m. you can hear us talk about mortgage investing in detail at length for the hour-long show, or go to mortgageinvesting101.com. And we've got like the last 15 shows, podcasts, all there that you can listen to. The shows are a little bit different, but we generally cover the same types. But about every 2 or 3 shows we do repeat ourselves, so you don't have to listen to all 15 unless you really have a glutton for information.
Information, not punishment. For the
I won't say
information.
glutton,
No.
glutton for information.
Okay, so give the audience here, because I know we do it on Mortgage Investing 101, but this is the Best of Investing. So
Yes,
give
it is.
the audience the deal that you were mentioning earlier today about Elk Grove.
Yeah, so
Because people want to understand, like, why is someone willing to pay 10% interest?
So here's a typical loan situation. We do a lot of loans to real estate investors buying property through a short sale. That means that the owner of the property owes more than it's worth, and the people who buy short sales oftentimes make a lowball offer to the bank. When I say lowball, I don't mean obscenely low. It's usually below market value, and the reason is because oftentimes it takes a long time for these to close. It takes a while for the bank to decide to actually approve the short sale.
Well, and if the bank goes through a full foreclosure, then when they try to sell it, it's going to get discounted severely.
Right. So it's generally a discounted. It's usually not an arm's length market value, or it's arm's length, but it's usually not a market value transaction. So in this situation, this loan we're closing next week in Elk Grove, it was built in 2005. It's a lovely looking home in a neighborhood of homes. It's a subdivision, a newer subdivision built less than 10 years ago, and I don't remember what the amount owed against it, but the bank, there's a first and a second, so the person who bought it was 100% financing, bought it at the height of the market, probably paid $450,000 to $500,000 for this house. That my buyer, the borrower and buyer, made an offer a year ago on this property for $295,000, and a year later, he comes to me and says, "I finally got approval from the bank on the short sale."
Yeah, no,
Why
but
it took so long and why they didn't foreclose?
Maybe
I
because
mean,
it was the first and the second.
yeah, there's probably a number of stories here, and it just goes to show you that the foreclosure business right now is just such a mess, thanks to all the government intervention and all the pressure on banks not to foreclose on homeowners.
Do you remember how much square footage is on this house?
This is 2,800 square foot home.
Wow, he's buying it for a little over $100 a foot.
Right.
And it's only an 8-year-old house.
Yeah, it's a gorgeous home.
There's
like I
nothing
said.
wrong with the house.
No, other than that, with the guy has a budget of about $25,000, which he figures will cover the paint and carpeting. Basically,
Sounds about
spruce it up. So let's just say he does go in there and after the owners move out, replaces the carpeting, paints the inside, maybe even paints the outside.
What would it be worth then?
Well, we did an appraisal on the property ourselves, as is, and the number came with a quick sale value of $325,000 and a market value with a 90-day exposure of $350,000.
So actually, this guy, he doesn't really need to put paint and carpet in. He could just buy it for $295 and flip it for $325 or more than that. But how much did you lend him on it? Or are you planning on lending them?
Well, the loan amount that we're doing is 70% of the acquisition price of, well, let's say 300,000 to keep the math simple. So our loan would be $210,000 on if it's 70% of the purchase price.
So you're lending $270,000 on a 2,800 square foot, 8-year-old house.
Yeah, the collateral's great, the security is great, and the reason he's not using bank financing is because he's an active real estate investor, has been for many, many years, has a couple of foreclosures on his credit report from several years ago that really still make him undesirable for in the banking community. And
Oh yeah, it's amazing how difficult it is. To
number
get
one.
loans
And number
from
two,
banks.
he's not buying it to move in, where the banks are generally interested in making owner-occupied consumer home loan purchases. They're really not in the business right now, and a lot of people don't know that. Listening out there right now, you may not know unless you're in the real estate business that banks have largely stopped making loans to real estate investors. They do not like making short-term fix and flip loans. In other words, they don't want to make a loan that's going to get paid off in 6 months. The banks are not fans of that. They're in the business of making long-term notes, 30-year loans, and then wrapping those up and selling them in the form of bonds in the secondary market. So they can't sell a 6-month loan, and there are not that many portfolio lenders out there these days serving the real estate investment
And
community.
generally, those loans, they don't put prepayment penalties on them, so that's one of the reasons they don't want to do a short-term loan.
Right, as a real estate investor, you don't want to, get a 30-year bank loan with prepayment penalties. You want to get an interest-only, no prepayment penalty. I'll pay it off as fast as I can from a hard money lender. No questions
What
asked.
are you charging this borrower?
It's a 10% note rate, and again, he doesn't care because he doesn't plan on owning the property that long, and three points on the origination
Wow,
side.
3 points. But what the audience doesn't know is that if they invest in the fund, because I'm thinking, okay, well, let's say you charge him 10%, but he pays off in 2 months. But that's not the worst thing in the world because you're splitting the points with the fund.
That's right. So the fund is going to make this loan. This is a Pacific Private Money funded loan, and the 3 points are going to be split. 1.5 goes to my sales team, and the other 1.5 points goes into the fund, along with all of the note rate, all 10%. So for as long as he pays that loan, the entire note rate will go to the fund. And so one might ask, well, if you're splitting points with the fund and 10%, how come the payout to the shareholders isn't more than the 8.5% target rate? Well, the answer to that is, in order to get some of the more conservative loans, we also have loans in the portfolio that are paying where the note rate's 8, 8.5, 9, 10%.
More conservative. You can't get too much more conservative than that loan, but you are lending 70%, not 50%.
Well, when I say conservative, we have some loans in the portfolio where, for example, we have a San Francisco property where was free and clear, and the owner of the property needed a quick $200,000 to take advantage of a business opportunity. Well, $200,000 on $1 million home, that's below 20. That's 20%.
That's the kind of loan you actually hope he doesn't pay, so that you can foreclose.
And in that type of loan, we had to offer a single-digit rate to be competitive. So I think it was 2 points, and I think maybe 8.5% on that particular loan. So there's a myriad of loans in there, and you want to have, you don't want all your loans to be to flippers. And it'd be great if all your loans were low LTV loans on,
Sure.
25% on San Francisco property, but that's not realistic either. So the whole idea is to be both geographically diverse as well as diverse in terms of the actual type of loan, the type of risk exposure.
Okay, we are going to cut to ours. So thank you very much, Mark. How do people get a hold of you if they want to invest and earn over 8% on their money?
So give us a call. We have a 415 number. We're here in the Bay Area, 415-883-2150. You can call over the weekend and leave a message, and we'll call you back next week, 415-883-2150. Or to find out more information about our company, Pacific Private Money, go to pacificprivatemoney.com.
And you can also go to our other sister show, Mortgage Investing.
MortgageInvesting101.com. We got websites all over the place.
Can't swing a
Best
dead
of
cat
Investing.
without
That's
hitting a
right.
dead cat.
Bestofinvesting.com. I think you got 5 websites out there.
Five.
You got them all up. We're everywhere.
Okay, here is the second commercial break trivia question. Again, the theme is the movie Back to the Future, and specifically Doc.
Yes, indeed.
Christopher Lloyd. What country did Doc steal the plutonium from? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What country did Doc steal the plutonium from? 888-912-1190. Make sure to include your name, your email address. Speak slowly. Spell out your email letter one letter at a time. Make sure that you make the phone call, and we will tell you if you're one of the first 3 callers, or we'll tell you if you're caller number 4, 5, 6, or 7. And if you say you stole it from the United States, we'll answer you back that is incorrect. And don't touch that dial, because the Best of Investing will be right back. That was a long one.
It's all right. Keep going. I got some real estate
Okay,
snooze.
good. You're not
That's
going to
actually good
snooze
stuff.
me.
I can make boring statistics sound riveting.
Okay, I can make them sound even more boring.
I could do it like Michael McNair. I can't remember which show this is.
Having fun, Mr. Kramer?
Oh, yeah.
Are you learning a lot?
Oh, yeah. I'm gonna learn where that came from. What country? I don't remember at
Did
all.
you see the movie?
Oh, only about 5 times.
5 times.
I love it.
Yeah.
One of my favorites. I knew the car, but I don't know the.
That was not a question I asked on BOI. See, because BOI, or Mortgage Invest, because BOI has 3 questions. Mortgage
That's
Investing
right.
only has 2. Okay.
All right.
One's of A, V, go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money, California's fastest growing private lender. When we cut to the second commercial break, we asked this trivia question. Again, the theme is the movie Back to the Future, and specifically Doc. What country did Doc steal the plutonium from?
Is it Borat's home country of Kazakhstan or?
Nope.
I don't remember.
Libya.
Oh,
Remember the
that's-
Libyans.
That's right.
The
it was,
Libyans,
that was
yes.
that was the decade of the Libya.
Exactly.
musicians,
Yeah, sometimes it's, you know.
Muammar Gaddafi.
Yeah. That is correct. And by the way, okay, next week we're going to be having a special trivia contest. The winner is going to receive an overnight stay to the beautiful Mandarin Oriental Hotel in San Francisco with breathtaking views of the city, restyled rooms and suites, and one of the city's best restaurants. Mandarin Oriental San Francisco aims to delight with its Oriental charm. Mandarin Oriental is within walking distance of Fisherman's Wharf, Union Square, Chinatown, and the Ferry Building. With 158 elegant rooms and suites and incredible views of the city, the bay, or San Francisco's iconic bridges, it is the perfect destination for a relaxing staycation. Their new spa offers a range of luxury treatments. Check them out at www.mandarinoriental.com/San Francisco. Now, the trivia question for that vacation stay, overnight stay, is this question. Almost 70% of men have done this to please their woman, even though they didn't want to. What was it?
And it's a clean
It's
question,
clean,
right?
yeah. Well,
Doesn't sound.
it's supposed to be clean. Yes, okay. Now, the rules. You need to email edward@bestofinvesting.com by midnight tonight, and we will pick from amongst the correct answers we receive. We'll announce next week's winner. Okay.
What was the question again?
The question is, yeah, I know you'd like this one. The question is, almost 70% of men have done this to please their woman, even though they didn't want to. What? Think clean thoughts, Mark.
All right.
Okay, now, to give us an update of what's going on in the market, stock in real estate market.
That's right. That's right. We've got a little bit of a real estate show here today. Since Edward, it's just you and I, and of course we're a couple of old real estate pros being involved in the real estate market here in Northern California. Both of us, well, we're the same age. I don't know if any listeners would know. We're only a couple of weeks apart.
That's it.
In our early 50s here.
And start singing that song, Just You and I, Just You and I.
I mean, real estate's the only job I've ever had. I mean, went to work for a real estate development company right out of college in 1982 here in Marin County, and in commercial real estate, and been involved in residential real estate lending now the last 5 years in this new market with Pacific Private Money. So I make it my job to stay up to date on what's happening in trends in California real estate. And I've got a couple of favorite blogs, and one of my favorite blogs is, well, it used to be foreclosureradar.com. Now it's called propertyradar.com, and that is the Sean O'Toole, who was a previous guest on the Best of Investing, actually now a couple of years ago. Invite him back again one of these days.
Sure.
He's one of my favorite blogs, and so
he's one of your favorite blogs.
he's one of my favorite. He has one of my favorite.
He has one.
Yeah,
Okay.
he has one of my favorite blogs because again, he's one of the smarter guys in the business, and so he like us tries to kind of weave through the headlines, if it bleeds type headlines that we see in a lot of articles in the paper. And the newspaper really isn't always the best place to get your real estate information.
No.
I like parsing it from some of these more sophisticated real estate investors like Sean O'Toole, who really has been, I think, spot on his analysis of the market in the last 5 years. And so anyway, his most recent blog post talking about October trends. One thing that I found very interesting is that we kind of know that pricing has gone up quite a bit year over year in many markets, but what's trending right now is actually since the summer, the median price statewide in California has stayed pretty steady. That's $360,000. It's been that way. It's hovered right around the $360,000 price since June. So we've really had, if you look at the market of California as a whole, we've really had stabilization there. Now, year over year, we've had a steady increase in home prices, and we're now, we've seen a lot of people who were in severe negative equity start to, have that be less and less of an issue, and some people who were underwater are now no longer underwater. But interestingly enough, there's still, according to this blog post, 1.8 million, which is 22% of homeowners that are still effectively underwater, not technically underwater.
More than
but
1 out of 5 houses is underwater?
No, technically no, effectively, I'm sorry. 1 out of 5 homes are effectively underwater. What that means is that they're not necessarily underwater, but they don't have at least 20% equity in their home.
Oh, okay.
So they really don't have enough room to sell their property and have a down
Pay
payment for the next
commissions and all
right,
that.
and all that stuff. So they're they're effectively shut out of the California real estate market. So even though the news has been good for people in the last 12 to 18 months, they've seen a little bit of recovery in the value of their homes. The fact is that there's still a substantial number of homeowners that are kind of technically stuck and can't move. And we've seen a flattening of the real estate market. And so what I found interesting in Sean's comments section, which is at the end of his most recent blog post, he talks about the fact that the real estate market is driven largely by government intervention these days, and that meaning the pressure on banks not to foreclose, the Dodd-Frank regulations surrounding new financing, other foreclosure laws. And so he's really, as he looks ahead to 14, he says here, he feels that the likely forecast is that things will be fairly flat for a while, with a typical seasonal dip in sales volume in January and February of 14, with little price movement as both buyers and sellers call each other's bluff.
So interesting.
I find that
What about
a-
interest rates? How's that going to affect?
Well, he does not talk about interest rates here, but I heard a leading economist speak at the American Association of Private Lenders conference in Vegas 2 weeks ago. And this is a guy I've heard before, very, very bright economist who's very popular on the speaker circuit these days. And he believes that interest rates are going to remain flat in 14. And in fact, based on what the Fed is saying, they intend to keep downward pressure on interest rates as long as the job market doesn't substantially perform better than it has been in terms of recovery.
Well, I think Bernanke had said a couple of years ago they were going to keep rates down throughout 2014.
So that's not good for savers, and it's not good for people who like to invest in bonds. But one of the things we talk about on the show is, trust deed investing in mortgage pool funds, which are secured by loans made to real estate investors, where we can still charge fairly high rates to real estate investors because they're willing to pay a high price for short-term capital. The delta or the difference between what you can earn in the bank and in money market accounts right now and what you can earn secured by real estate with a financial instrument.
Huge.
I mean, it's amazing. There are people out there that are just, that are angry at me for having this radio show and talking about mortgage pool funds and trust deeds, because it's been the best kept secret
Not any
in
longer.
investments for decades. I mean, I've got some of my lender clients have been doing this for 20 years, and they've actually are disappointed because they remember the good old days where they could make 12% on their money, hands down, no problem at all with their loans, and now their rates of return have gone to 11 to 10 to 9 and sometimes 8%, which is what we pay our mortgage pool fund investors.
Yeah, they haven't
8
lost
to
money.
9%.
They just
No, they're not losing money. They just remember the good old days of easy double-digit returns.
I remember money market funds paying 16% in 1980.
Well, right, and I'm not going back that far in hard money. I don't know what hard money rates were back then. 'Cause I wasn't familiar with
1979, it was 19%. I
Really?
remember I did a second mortgage. I was 19 years old, and I did one of those. Someone had come to me and needed a second on the house, and it looked like it was a good deal, and I got 19% interest, and it worked out like clockwork.
That's that's just amazing. And could that happen again? Of course, lots of things could happen again. But the smart money or the smart people that I'm reading about and listening to in terms of predicting where's real estate going, where's interest rates going, where are mortgage rates going, the belief is that that you can expect not a lot to change. Now, does that mean we may see 3.5% mortgage rates again? Probably not, but right now we're in the low to mid 4s, and
It's still really good.
it's still really good when you think of it. I remember when 6% mortgage rates seemed like free money,
Yeah,
and and now articles that I've read in the last couple of months predict that a 6% mortgage rate would have a substantially negative effect on real estate prices, which seems absurd if you look at it from a 20-year perspective.
No, you got to look at it from today.
You got to look at it from today.
4.5% going up to
Right.
6. Yeah.
Well, and let's face it, one of the reasons why $1 million homes are worth $1 million now that were worth 20 years ago $300,000 is because you can buy so much more with the interest rates being as low as they are right now. So that's actually true. So as mortgage rates go up, it is going to have a downward pressure, but that's not necessarily a bad thing. I don't necessarily foresee right now when the next dip is likely to happen, because there's so many variables.
But even if there's for you and your fund, even if there's a downward pressure, it doesn't mean that people are going to lose money in your fund.
No, and the fact of the matter is, and there was a great article that I actually brought a couple of weeks ago but didn't share with the audience.
Can we share that when we come back from break?
Oh, is it that time?
It's that
Let's
time
do
again.
that. Let's
Okay.
talk about that.
All right, so we're going to cut to our third and final commercial break. And again, the trivia theme is the movie Back to the Future, and specifically Doc. According to Doc, what makes time travel possible? And there's a hint here, 2 words we're looking for. The first 3 callers with the correct answer win a free 3-day 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. According to Doc, what makes time travel possible? And the hint is 2 words. And again, remember, answer the trivia question, whether you think you're in the first 3 callers or not. We'll get back to you to let you know what number caller you were. You always want to make sure you got the right answer. Make sure to include your name and your email address. Please speak slowly and spell out your email 1 letter at a time. And don't touch that dial, because the best of investing will be right back with some closing comments. That article? Don't worry, it's on. It's just
Screensaver,
over. Yeah.
battery
Yeah,
saver.
really.
Screensaver.
Screensaver. know who my guest was on the sports shows last week?
No.
Bob Myers, the general manager for the Warriors.
Ooh.
It was actually good. Good job.
I hate when it gets dark.
Yeah,
It's just sort of not depressing. I just don't like it.
especially if you get to work before the sun comes up too.
Yeah.
All right, let's see what we got here. We got. Yeah, we only have 6 minutes and 70 seconds.
Okay. Yeah, I get used to the long segments at
Yeah.
mortgage investing. It's hard to keep it.
Okay. You ready? Here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money. When we cut to the third commercial break, we asked this trivia question again. The theme is the movie Back to the Future, specifically Doc. According to Doc, what makes time travel possible?
You said 2 words?
2 words.
Is it lightning?
No, it's not lightning. Kramer, you know the answer?
No.
A flux capacitor.
Oh,
You
yeah.
remember
I
that?
totally forgot that.
Okay. So, Mark, we have a few minutes left. Tell us about that article.
Well, we were just talking about real estate investing in the last segment. You wondered, about what if it does trend down a little bit, downward pressure because of potentially rising mortgage rates in the future. And I just wanted to whip out this article from a couple of weeks back. It's a blog post by Doug Clark, star of Spike TV's Flipmen, who's a real estate coach, and like his Twitter handle @DemoDoug. Anyway, it's titled "It's Always a Great Market for Real Estate Investing."
Which, by the way, have you ever watched any of those flipping shows?
Oh yeah, they're great.
They're actually pretty good. I've enjoyed them. Yeah,
So,
go ahead.
and it's true, and I have always said this, and I've always felt this, because I've been working for 30 years in, started out a family-owned business, real estate development company, and over my 30-year history, and I remember my dad, growing up, and he was a builder, started out in the mid-'60s. You can always make money in real estate. It doesn't matter whether it's going up, whether it's flat, or going down. I mean, people were making money in real estate in the years 2008, 2009, and 2010. What was real estate prices doing in the Bay Area during those years?
Going down,
Going
down, down.
The reason is because you can flip a house in 4 to 6 months easily, and it's done all the
And if
time.
you buy
real
it
estate, right, and real estate prices don't generally go up or down that quickly. They can trend down, they can trend up, or they can be flat. So there's always money to be made. People need to rent. The demand for rental housing is fairly consistent, and unless we just build a bazillion homes where there's a huge vacancy, but that's not likely to happen, not anytime soon. So again, we make loans to real estate investors at Pacific Private Money Fund, and our primary funding product right now is our mortgage pool fund, the Pacific Private Money Fund, which is paying a target return of 8.5% to our shareholders right now. And
are you on target?
And we're on target. In fact, third quarter distribution was at an annualized rate of 8.9%. So again, we're making loans at generally no more than 70% of the purchase price. So we're really not worried about whether real estate doesn't go up for the next 6 months, or maybe happens to flatten out or even go down 5 or 10%, because our investors are still going to make money, not as much as they expected, and our loans really are not at risk when we're at 70% of the purchase price, particularly when they're improving the property. More often than not, the effective loan to value on the loans we make once the property has been remodeled are 50% loan to value, the new value, or less.
Yeah, can you imagine the borrower goes ahead, puts all this money into it, and then loses the property to you? He doesn't want to do that.
It doesn't happen. And in 600 loans, it's rarely happened. I mean, we've had like 5 foreclosures in $600. It's a ridiculously low number. It just
But here's the catch. Not the catch, but here's
the
the
good
part
news.
of it.
Nobody ever lost money.
No, and those 5 foreclosures, nobody lost money.
Yeah, so it wasn't like, when the market turned and you had high percentage financing out there or a second on an overinflated property. I mean, people did lose money in private lending when the market turned because they were generally exposed in the
High
loan to value, high loan to value. So, the industry is different today than it was 10 years ago. Again, we're not making loans to people in distress generally. We're making loans on distressed real estate. But that's different than a distressed borrower, which used to be the purview of hard money. It's really a different industry today. We're serving a market niche that the banks basically left as a void when they decided to basically opt out of the real estate investor financing market.
And how do people get a hold of you if they want to invest in your mortgage fund earning over 8.5% right
So
now?
our phone number is 415-883-2150. We're in Marin County. You can also go to pacificprivatemoney.com, and we just launched our new website for our mortgage pool fund, and not trying to confuse you because the name is similar, but the mortgage pool fund website that we just launched can be found at pacificmoneyfund.com. That's pacificmoneyfund, all one word, .com.
And they can also go to mortgageinvesting101.com, our other sister show.
And listen to a podcast where we talk for the whole hour on mortgage investing and the nuances and ins and outs and safety features of a mortgage pool.
And also to remind people who were listening in the beginning, if they wanted a free life insurance quote, I'd be glad to run the numbers for them.
Oh,
They can
that's
call
right.
our 888-912-1190 number. Just leave your name, your age, and how much insurance you want, and we'll get back to you. Okay, here's our thoughts for the day. If you can't fix it with duct tape, you haven't used enough. You ever heard that one before? And Will
So
Rogers said, stupidity got us into this mess, then why can't it get us out of this mess? Right? Stupidity in, stupidity out. Works for me.
Usually
Okay.
makes it worse.
It does. So, audience, have a very nice Thanksgiving coming up here in a couple of weeks. Tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
My favorite part.
Yes, indeed. How's your throat?
Score.
Yeah. Oh, God. Just trying to get out of a chair after 2 hours.
Yeah.
Woo.